All right, best ways to save money on taxes before the year ends, go. Number one, defer income. If you can afford to not receive all of your income in the last month of the year, tell the people paying you, don't make your payments either until January, or if they still want to take the expense, have them write their check at the very end of December, mail it out, so that way you don't have constructive receipt. You haven't actually received the check until the new year. They can take the expense and you don't have to count the income until next year. Okay, all right, I like that. What else you got? Well, on the flip side of that, accelerate expenses. If you know you need certain things for your business soon next year, go ahead and pay for them in December rather than waiting until January or February to pay for them so you can take the expense now rather than next year. Write-offs. Got it. I like it. All right, what else you got? If you need a new business slash personal use vehicle in the near future, buy it as close to the end of the year as possible so you are able to keep your business use as close to 100% as you can, because you can limit the amount of personal miles you have on that vehicle in a short time frame. And if possible, a vehicle over 6,000 pounds or one that's eligible for full expensing with Section 179 can further increase the amount of first year deduction you can get on that vehicle. Oh, okay. So if I bought a vehicle on December 31st and drove it only for business that one day, I would have 100% business use and could write it off fully in that year. If you bought a vehicle that's eligible for full expensing with Section 179, technically yes, because you bought the vehicle before the end of the year, you put it into use before the end of the year, and you drove it exclusively for business in that year, it would have 100% business use and you could fully deduct it. But do understand, most vehicles are not eligible for full expensing with Section 179. And beyond that, do understand, the following year, you don't want your business use to drop below 51%, or you're going to recapture as income that excess accelerated depreciation you took the prior year. Okay, makes sense. Be careful with that one. All right, one last one. What can I do to save money on taxes before the year end? If you have rental properties that are producing positive net income and you haven't done a cost segregation on them, might be worth looking into doing cost segregations on one or multiple properties to catch up on that depreciation, reduce that income, potentially creating a loss, and if you're a real estate professional or below a certain level of income, it could even reduce your other income that you have that year. My man. All right, perfect. I'm gonna go do all these things right now. What you're actually gonna go do is set up a meeting with your accountant to talk about all these things in more depth, specifically about your business. That way you can see how it impacts your tax situation, your business, and whether it's wise to take any of these this year, next year, or maybe never.